Right, right.
Sir, one more minute. We are just,
Yeah.
yeah. Now we have redirected, sir. One second. Yes. Shall we start, sir?
He's joining. Bhaskar is joining. I just called. Sridhar, I also told him he will join now.
Right, sir.
Or whenever they come, we'll just ask them to comment in case
Yes,
there's
sir.
connection issues.
Yeah, yeah. Now YouTube is live, sir. We can go ahead.
Yeah.
So, very good afternoon and warm welcome to all the financial enthusiasts for this yet another wonderful session on financial fitness intelligence for pediatricians. So, we have a very good friend of mine, Dr. Pankaj, who is also a heartfulness practitioner and who is from UAE. And I'm really glad to see his enthusiasm in learning. I'm always inspired by him in learning various things. His passion is highly appreciable. So now, with that initial words, I request our founder for this financial fitness program, Dr. Ajay Kumar sir, who always inspires youngsters to be financially fit all the time. And these are the snippets in the past 4 years. Sir is doing with a great passion and selecting master speakers all across the country. And this is his dedication, his gift to the pediatric world. Thank you so much, sir. Over to Ajay Kumar, sir, to give the brief introduction of the sessions and invite the speakers.
Thank you, Dr. Pawan. Wonderful. I mean, we are all indebted to you. You have been consistent for doing this particular anchoring and also promoting and hosting the webinar from 4 years. You have been participating and organizing physical conferences and workshops. Thank you, Dr. Pawan. So, before I introduce the topic, we are grateful to our Pediatric Academy of Telangana, which is actually the host and also encouraged, given by most of the presidents and the secretary and the executive board member to the F3 group in promoting financial literacy and financial education across the country. In the Telangana, started with in Telangana state, but now we are across the world. We have got 2000 WhatsApp members. We have got regular Sunday webinars, and we have covered almost 100 recordings, and they are available in YouTube, both in the Pediatric Academy of Telangana's official YouTube channel, and also I have listed in my exclusively financial education channel. So I request, I do see Dr. Sankoj Bhaskar, our President, Pediatric Academy
Yes,
of
sir.
Telangana, there. So I request him to kindly say a few words and give your inspiration and also message to today's topic. It is given by Dr. Pankaj Nandlal Tareja. He is from Abu Dhabi, UAE, and he is talking on a very interesting subject called exchange traded funds. Over to Dr. Sankoj Bhaskar, President.
Yeah, thank you, Dr. Ajay. It's a honor for me to be with you on the platform. And Pediatric Academy of Telangana State is really proud to be associated with this F3 group, which is really dynamic, and I proudly say the most active, I can say, the group of IAP. Now I remember in Pedicon 2025, we had this finance literacy workshop, and it was overbooked by 2 to 3 times, and you had to take another additional hall to accommodate the delegates. So that is the interest and enthusiasm you had created among the IAP members. Hats off to you and your team, Dr. Pawan and others, really doing a great job. Sometimes a person like me at the age of 65, we should have had these meetings during those days. Probably we could have become a little more aware and knowledgeable about the finances and its management. Maybe we would have become a little more richer. But anyways, still it's very useful to us. And particularly in today's program, this exchange traded fund, ETF, is a modern way of investing, which is already popular in many countries. and is coming up in a big way in India. It's an open-end investment company which trades its shares in the stock exchange directly from owners, unlike the mutual funds where you deal with the issuers. Thank you, Dr. Nandalal, Dr. Pankaj Nandalal Tardeja from Abu Dhabi for your interest and for your enthusiasm to be with us to talk on this very interesting topic. Dr. Ajay, who is considered to be our what you call kingmaker of our Telangana state, a senior person, the first president of IAP Telangana state. And unique about him is he was the president of combined Andhra and Telangana then, and as well Telangana state. So he was very happy to be associated with you. Thank you, Dr. Pankaj, sir, for accepting our invitation and to be with us. You're welcome, sir. Thank you, Dr. Ajay. Over to you. Thank you.
Thank you, Dr. Pankaj. Thank you, Dr. Bhaskar, for that wonderful introduction and brief support which you have given us and blessings to our program. With your support, we are moving forward and educating our
Dr.
IAP
Harish,
members in a large number.
Dr.
I
Harish is
also,
there.
he's there, sir, Dr. Pawan.
Yeah, Dr. Harish has joined, sir. I made
Yeah.
him co-host.
One, I request if Dr. N.L. Sridhar, Secretary of Pediatric Academy of Telangana, another dynamic office bearers, if he is in our group today, I have informed him. If he found time, just kindly give your few words of introduction for the F3 group. Dr. Sridhar.
Sir has not joined, sir. I'm
Okay.
not finding him in the list. Yeah.
So please,
So Harish Gopal. Yeah, Harish Gopal is there. Yeah.
Harish Gopal sir is our academic director, the main person behind the program selection, topic selection, and the thrust given to the education of the financial literacy. Among the doctors is mainly role played as a solid support for this F3 group. Dr. Harish Gopal sir.
Harish, sir, you can speak. Hello. Maybe net issue, sir.
Okay. So we'll get back both Dr. Harish Gopal and Dr. Sridhar whenever they join us. But let's start the main program, which I'm sure many of us are eagerly awaiting. It's a very, very financially safe, profitable, and growing financial instrument all over our country and also in the world, exchange traded funds. And we have a very erudite speaker who has worked on it from the past 4 to 6 weeks preparing for the today's talk. And we requested him, he volunteered. We all know that now this ETF is targeted towards everybody. It's like a mutual fund, but it is listed on exchange traded fund, as our president has said. So Gen Z, which is so very what do you call educated in financial matters nowadays, especially when they are spending so much on, say, splurge on the tickets, like for concerts, 20,000 tickets of the Ed Sheeran concert or a Coldplay concert. Probably even they invest a lot in the financial market, but for them I would definitely ask them to give attention to this type of a fund ETF, and they will definitely get a better returns, better safety, and better security in the future. The Demat account is a compulsory to have ETF, which every one of us know. And that Demat is regularly in your regular Demat, you can do that. Or the most popular Demats of our country, like Zerodha, Grow, Upstock, Angel One. These are some of the popular Demat accounts. And we know that the ETFs are rapidly growing. They are doubled in last 1 year. Their trading volumes have gone up from 5,000 crores to 4 lakh crores now. They have increased adoption by Indian investors across the board. because they felt that it is a tax efficient. They say that it is better efficient than the mutual funds capital gains tax rate. And also there are various inbuilt safety measures, like there is no expiry, there is no zero sum game here. Even though there are ETFs which are known to expire or become zero if there is no investor or there is no liquidity. So the fee structure is very less. There is no management fee. There is no expense ratio, almost minimal. And ETFs are not new, as you all know. Dr. Pankaj will tell us. The first ETF started in our country in 2001. So we are already 24 years old. Nifty Bees, if I am permitted to say so, is almost 24 years old in India. So many of you are investing in Nifty Bees also. So with this short background by all of us, we invite Dr. Pankaj and to start his presentation, and if possible, go briefly, and if we are unable to complete it, I have requested Pankaj to go advanced ETF in a next session or second session as a part 2 follow up to this today's brief introduction or basics of ETF to all of us, and especially for the newbies who don't know anything about ETF. Over to Dr. Pankaj.
Okay. Thank you very much, sir. Thank you to the IAP and my privilege to talk on the topic. So I will start the topic. Most of the things are told by Ajay sir in very short. So the content of today's talk will be, we'll talk about what is ETF in short, development of the ETF, how it was started, from where, types, what are the market makers in the ETF, various portfolio according to age-wise, how we can make for young to older generation. Everyone can use it, how they can use it, what to see in it, and what are the advantages and disadvantages, along with the tax benefits, and various websites in the practical way, how to find, where to see, and what to do. So we start from basic to the advanced level, but I will try to cover as much as possible. Actually, this ETF is a session of 1 week, full 1 week. Whatever we can do in the stocks at present in the Indian market or any market, that all are applicable on the ETF. What method you say, what strategy you say, everything applicable, technical, fundamentals, process, method, each and everything. There is a lot of content in the social media, on the education material available for the ETF. Why the demand is increasing? Because it is a zero loss process. ETF never becomes zero. There is no loss at all. It is a slow journey. Because of the future and options, liquidity, new rules coming up, many retailers are now shifting to the ETF, because you can invest in the ETF from 10 rupees. There is a Nifty 50 ETF by one AMC, which is available at 10 rupees per unit. There is a gold and silver ETF from some AMC, which is available at 9 rupees. So see how easy and how cheap and how simple it is. I will show you one portfolio in which in 70 rupees, we can invest whole India market, only in 70 rupees to the ETF. Let's see one video in short.
हम मार्केट की घंटी से पहले उठकर स्ट्रैटेजीज बनाते हैं। हम 9:15 से 3:30 टैब्स और स्क्रीन्स में, रेड्स और ग्रीन्स में मार्केट का मूड पहचानते हैं। हम भाव को भगवान, चाय को महान और चार्ट्स को कमान मानकर बाय और सेल के तीर चलाते हैं। लोग हाथ की लकीरों में विश्वास रखते हैं, लेकिन हम चार्ट की लकीरों से अपनी किस्मत बनाते हैं। लाखों की भीड़ में हम अपना मकाम बनाते हैं। हम दुनिया से बेखबर होकर दुनिया की खबर रखते हैं। हम रिस्क्स में हिम्मत और मुश्किलों में सब्र रखते हैं। हम ना लॉसेस से डरते हैं, ना प्रॉफिट से बिगड़ते हैं। हम ट्रेडर्स कहलाते हैं। हम मार्केट की रफ्तार जानते हैं। हम पैसे से पैसा बनाते हैं। हम पास्ट और प्रेजेंट को समझकर फ्यूचर्स पर बोली लगाते हैं। हम मार्केट आवर्स के बाद भी मार्केट्स में ही पाए जाते हैं। हमारे लिए जिंदगी मार्केट्स है और हम मार्केट से जिंदगी बनाते हैं। हम ट्रेडर्स कहलाते हैं। जो मार्केट्स के लिए बने हैं, उन्हीं की तरह धन भी है, made for trade.
So how many people can correlate our position with this video? Now comes the disclaimer. This is a purely education process and session. I don't any financial constraint with anything, no commercial gain. I have used various websites like NSE, BSE, SEBI. I acknowledge all of them. I have taken the content from the various websites and YouTube. So I acknowledge everyone. There is no buy and sell. I am not a SEBI registered. This is a closed group for education. Please see at all your own level. So this is a disclaimer in short. We see investing with a purpose, with not the impulse. Like, suppose now I want to invest. I don't have any knowledge. How I will start? So many stocks are there. So many instruments are there. So I need to decide how to do. If I don't know anything, the ETF are the best. So I need to see the goal-oriented investment. So many things available in the market. So this all can be covered only with the ETF. If I say any investor or trader at present don't see anything, only do ETF is more than enough for this present life. How we identify yourself as an investor? If you say yes or no to some answers, have you seen the full market cycle? If yes or no. What are our investment horizons? Depending on the type of investors and the portfolio management, this all can be done with these ETFs. How you react to the market, whether you react panically or not panically. It tells us about our nature, our finance, our behavior, our psychology. How we handle the short-term losses. We get panic or we sell or what we do. And how we review and rebalance yearly, how much time we give to the market. If all these answers you want for your side, ETF is the best. Nothing is required from this. What is the full form of BES? Can anyone say? It is a benchmark exchange trading scheme. How it came? It was the name given from the Nippon India ETF mutual fund. It is a very old name. That's why people say to the ETF is a BES, but it is not for the all ETF. It is a word given. ETF is the exchange traded fund, which is like a listed mutual fund. It is one of the listed mutual fund in the market, which can be traded like any stocks. So that's where the name has come. This was given by Nippon India Mutual Fund long back in 2002 first. We can say in the financial word BES as in beer exchange traded scheme. What does it mean? It can be associated with the simplified transferability and the benefit of the units which we get in the ETF. This is an open-ended scheme. This is a financial product which tracks the specific index. There are various indexes at present in the Indian market which are listed and which are madeable. So what are the instruments for the passive fund? We say index mutual funds and the ETFs. These are the instruments for the passive fund. But this is an older way of saying it now. ETFs are also done as an active investment. Many active traders also are doing and trading in the exchange traded fund. So basics of ETF, we know this is the exchange traded fund. We require the demat trading account. They are traded like in stock. These are like the mutual fund where the money is pooled from the investors and it is given as a units. These are the low cost, transparent and flexible. These are easy to use and easy to trade. It is a very appealing option for investors nowadays with limited experience of the stock market. Like as I told, if you don't know anything, you can do the trade. So it invest in the various diversified schemes, bonds, commodities, currencies, you name it, the ETF is available in the market. So the journey of ETF in the short, as we were told, first ETF in India was launched in 2002. Then 2003, some liquid came. 2000 March, gold ETF came first time. Government reduced the STT in 2013. And to the surprising, the demand and the awareness of ETF increased from 2015 when Government Employee Provident Fund decided to invest in the Indian market only in the ETF. They never invest in the stocks. They only invest in the ETFs. There are a few ETFs where they invest. From here, the awareness, the investor came to know, and the liquidity, the volume increased dramatically in the market. 2021, post-COVID, when people understood the importance of finance and investing, there was a huge jump in the folios of the various ETFs in the trading accounts. Now, today, in 2025, there is an exponential increase in the AM of the ETF from 13-14% to around 20%. There are at present around 270 various ETFs available in the Indian market which are tradable. NSE India, which is there, is the largest provider of the index in India at present. You see, in the last 5 years only, the ETF share in the mutual fund industries has doubled from 7 to 13%. So this is a short, the ETF which is grown. So this is just for the numbers. I will skip this slide. There is the smart beta ETF which we will see either today or next session. Even the REITs and InvITs, which are the type of ETF, not the ETF, type of ETF which are used for the real estate, means whole real estate you can buy in one unit from here instead of buying a physical real estate if the volume or the liquidity is the constraint. This is the growth of ETFs in India, which has grown from last few years. You can see the chart graph. This is last till 2022, the growth, which is 132 times. You see May 2010, what was the value, and see today in May 22. This is the present slides, which shows about till March, the growth in the value. If you see till June last month, 2 months before, there are 9.12 lakhs crore ETFs, volume traded AUM in the India at present. NSE India crossed 2 trillion mark few years back in the ETF index AMU. If you see the retail folios, the number, you see the March 20 in the Corona days, COVID days, what was the number, and see today in the March 25. It is 2.63 crore retail folios which are trading in this, and the number in the June of the ETF we see same. It is 2.8 now in the last 2 months. From March to June, it has increased to 2.8. The jump in the retail investor AUM, retailers are participating in the huge number. You see March 2020, it was only 5,000 crore. Now we can see it is 17,000 crore. So retailers are participating left and right in ETF. This is the number of ETF, which is old slide 252. Now it is around 265. We see the trading volume jumps. People are scared. If you ask some old timer, they will say ETF is very illiquid. It is very risky to trade, to buy and invest for a long time. They say they may not be buying, they may not get the seller, but it is a myth, it is a false. The liquidity is fantastic. We can see in the numbers of liquidity, crores. You can buy and sell in fraction of second like any stock. There is few ETFs are there where the liquidity is less, but commonly it is not there. You can see the jump in the AM. Most is only in the equity. The equity ETFs are more tradable. The growth, why the number and demand is increasing? Because the investors, the institutional investors are also increasing their investment in the ETFs, like in the gold and the various other equity. This is the EP of employee provident fund who invest only in the ETF. They don't invest in any stock in India. So because of this, also too much AUM and too much liquidity and demand is coming up. This is a positive net flow. Now we'll come, till now we saw the development process in this. But why there is no still awareness in the market, in the people? Because there is no any benefit to the brokers, to the fund managers. That's why the marketing is not done. There is no personal gain for them, so there's no much awareness. But at an individual level, people are getting understand by mouth to mouth publicity is increasing. If you see the types, there are broadly 4 types of the ETFs, which can be seen on the niftyindices.com website. Is their official website where we can see all the things. We can see the 4: broad, sectoral, thematic, in the strategy. We'll go today for the broad base in detail, and we others will just see the names. Now this is a total market presentation. The Nifty total market, which includes 500. There is a ETF on this total market also. You can buy in 10 rupees one ETF unit on total market. There is a multi-cap, Nifty 500, micro cap. So this is the structure, the organogram of this. On each and everything, there is a ETF. You can see here almost 18 boxes. On this all 18 boxes, there are ETFs present in the market. And how? Who is making this? Who are the manager? This is governed by the professional team of the NSE indices. There is no private player. The NSE is only involved. They have got the committee, they have the governance structure, they monitor, they rebalance, they reshuffle. Accordingly, every ETF has got their own the fund sheet, fund facts on the website, where we can see the whole constituents, how it is done, how it is added, and what is done. We see the broad one. These are the names of the broad ETF. This is in general, what will be the broad ETF, which will include the large cap, mid cap, small cap. In the combination of this, only these are included in this, nothing else, which are the large, having good liquidity, good volume, and already the indices are available and which are tradable. Like example, we know the Nifty Bs, we know Junior Bs, very common. We know small cap HDFC Bs, MO means Motilal Oswal small cap Bs. A1 total is by the Angel One, a total market index, which I told is available only in 10 rupees. There are so many other AMCs like Grow, Mo Nifty, Multicap, this all various, and the international ETFs. We'll come to now the sectoral indices ETF. The sector, like we know, auto sector, chemicals, IT, FMG, healthcare, all of this having an ETF. So where you, instead of buying one stock, you just go to the healthcare ETF. You will get the all pharma, hospitals, and related companies in that index, and you can buy and invest in those. Nifty IT, FMG, which is coming up. We see the sectoral rotation in the market. It is not same every year. If you see last 5-6 years, sometimes pharma is at the top, sometimes metal, even metal ETF available in the market. So this is sectoral ETFs. We see the thematic ETF. What are thematic? This is a theme which is created, index are created, like we see the REITs and InvITs. We see commodity, we see capital market, we see Indian consumption. You know, the defense, the MO defense ETF is there, which is on the defense India stocks. We got digital ETF available. We got PSE ETF also available on these services. Even you'll be surprised to see there is one ETF, the select IPO on the BSE index, which is the ETF which includes all the recent listed companies in the IPO. All those are included in this ETF. Instead of going for IPO, if you go for this ETF, you are capturing the growth of the recently listed all IPO in India. Like this, all are the thematic ones. Now come the strategy. These are known as the smart beta ETF, which is a flavor of a present. This includes 4 main types: momentum, value, quality, and low volatility, along with alpha, size, and multifactorial. Recently, multifactorial mutual funds have been launched. This will include each and everything from this. Like momentum, they will be more do the momentum in the bullish pair, but at present they all are down because of the bearish type of market. Value, they will run when the market is sideways. Quality, they will be always in the demand, in the low volatility. So these are the all possible strategy which are known as smart beta ETF. This is the factor ETF, which the factor is put on a base index. Like you see the Nifty 100 equal weight. The Nifty 100 is a basic index on which they put a one factor in which all the stocks 100 will be in the equal weightage investments. So these are various, almost there are 60 to 70s are there in this. Then all are available, all are tradable. We see apart from equity, now debt type of ETF, we know LT gilt Bs. This includes the Nifty 8 to 13 year GSEC. We know the LT gilt case. This is from the Zerodha. BS is from the Nippon. We know GSEC 10 year. This is a debt type of ETF which will give the stability and security but less return. There gilt Bs for 5 years. There are many hybrid and multi-assets ETFs available, but at present in India are not much listed. These are useful mainly in the Western countries. So many ETFs are available on this. In India, it is not there. Gold ETF, you'll be seeing surprise. There are 15 various gold ETF available in the Indian market at present, which you can buy and sell and keep for long term also. Same way with the silver ETF. Silver ETF is getting a demand. Silver ETF is also getting almost 7 to 8 silver ETF are there. We see money market index also available. What is this? You must be knowing the liquid Bs, which the people who are doing the future and options, they are using the liquid Bs very regularly. Now it is available as a liquid case. What is the difference? Case is from the Zerodha, which is a growth type of Nifty 1-day rate money market indices. We can see the debt and fixed income bonds, GSECs. We know GSECs available. These are the government bonds which we invest. Now, what are the market makers? What is this? We are listening for the first time. Even I was not aware. When I was going through this, I understood what is the market and how the ETFs are created. What happens? And respect to AMC, first see the listed indices which is there, which is tradable and having a good liquidity. They will decide which to do, what to do. So they will decide, and there is SEBI regulation. SEBI requires for the AMC, each AMC, when they are listing any ETF, they need minimum 2 people. People means those who can create a liquidity. They invest in this, and they are big players, institutions, or banks. So these are known as market makers. They will go to the AMC, they will both together, will exchange the required stocks, and in exchange they get the ETFs. And the ETFs units are given in the thousands, not in 1 or 2. So in this way, the ETF is created. The role of market maker is to see the liquidity is always there. There should not be much difference between the INEV, which is there to every ETF, and the current market price. So this is a growth. This is a chart which says what is ETF AMC, what are market makers, how the units are created, how the redemption is done, and what is the main purpose of this? To have a proper liquidity, to have a value current market price of any ETF near to their NAV, to avoid the liquidity problem, and to avoid any demand and supply issues. How they earn? What is the process? Market makers earn from the arbitrage. They buy and sell with the difference of bid and ask prices, from where they get the income, and they invest in huge amount. We as a retailer cannot become a market maker. and we cannot be those because the number is used, and there is a SEBI requirement guidelines in the process who can be this. So this is the process, and this is just a chart how to see and what they do. The main relation, the main purpose we discussed, it is for the liquidity, for price to be near INAV to avoid the value issues and the liquidity issues. So who are these? We discussed these are the authorized participant under the regulation of SEBI and NSE, AMC, they need it. What is their role? They provide the liquidity, they provide the ETF units. Why important? Who decides them? This is again AMC as we saw in the SEBI. Now AMC, suppose they want to create ETF units against a basket of any stocks which we saw. They will create the units, they will do the things, and they pass on the AMC to the public, where the retailers can buy and sell. So instead of we buying its stock in ETFs, the AMC creates for us an ETF which help us to invest. Now we come to the difference. What is the difference between the ETF and the mutual fund? So you will ask why I should invest in the ETF, why I should do so much efforts when the mutual funds are available easily where I can do SIP. Yes, you are correct. There is a few pros and cons for both. No one is having all pros or cons. So ETF, first of all, they are easy. The expenses are very less. If you see the expenses, the NAV is declared daily. The portfolio is declared daily. Only problem in our ETF is we need a demat account. Without demat, we cannot invest in the ETF. Now, mutual funds, the expenses is compared to ETF are more. Minimum in the active mutual fund, not the index fund. In the minimum in the active mutual funds will be around 0.8 to 1%. In the direct form, regular are different. They are bought and sold at the AMC level. NAV is declared at the day end, not in the market hours. And the portfolio is not declared or disclosed daily basis. It is on a monthly basis. But we can do SIP, DIP, lump sum, and goal-based investing. But nowadays, same thing can be done in the exchange traded fund also, without any much effort, only for few minutes in a day. So ETF are the low cost, market traded, and transparent. Mutual funds are easy access, wide choices are available, and they are professionally managed. But at the ETF, which enables even the smallest to smallest retail investors, as I told, and 10 rupees they can invest in the whole India, and he can be the proud owner of the most reputed companies by buying an index. Now, what is the difference between the ETF and the index fund? This is again the same things which you saw in the mutual fund. Now, ETF is a low cost, this we know. The stocks are high risk and the concentrated. ETF is a zero loss process of investing, active and the passive both. Now, who can be active and who can passive? We say better to be both active and passive both instead of be only passive or only active, because you can do investing and trading both in this process. Let's see one more video, 10 years origin.
प्रिया, 10 साल पहले अपने दिल की बात इसे बोल दी होती ना, तो आज ये मेरी वाइफ होती।
अगर 10 साल पहले छोकरी की जगह नौकरी पे फोकस करता ना, तो आज तेरी भी कोई लाइफ होती, समझा?
10 साल में क्या कुछ नहीं बदल जाता यार, है ना मित?
हाँ यार, 10 साल पहले ABC बैंक का स्टॉक ले लिया होता ना, 10 गुना फायदा हो गया होता।
अबे क्या है यार ये?
इन्वेस्टर्स पूरे टाइम सिर्फ मार्केट्स की ही सोचते हैं, इसीलिए जो मार्केट के लिए बने हम उनके लिए बने हैं। धन मेड फॉर ट्रेड।
तेरी वाली प्रिया।
Investments in the securities market are subject to market risk.
Okay.
Read all.
So we all keep on doing like this, correct? Nowadays, every time on the mobile, WhatsApp, we are keep on opening our investment trading applications mobile left and right. You go previously 5 years before, people used to talk only about the mobile phones, mobile instruments. Now everyone, you go local train in India, you go bus, train, aeroplane, and people are talking about the investing and trading and stocks, nothing else. So now, what do investors prefer? After this whole session, what we prefer? Mr. Long Term is there, who is a person who want to invest for a long term. So he prefer passive fund, but I say you have active fund also for long term journey. New person who doesn't know any generation, new people, what they will do? They don't want to do the passive funds because transparency is too much. Millennial, the new generation, because of simplicity, ease of use, availability of the resources, they will try to prefer the passive funds. And the Mr. Little is very new and you don't know and you want the low entry barrier, again, he will go for this. Now, what is the difference between the international and our Indian companies and the ETF process? If you see the Western market like USA, the more component is of the technology. You see 33% of index constituents is the technology. But in India, financial instruments are more, financial related companies. So there are few listed ETF in India, which are 6 in number at present. Because of the SEBI and RBI rule, the new mutual fund SIPs are not available and new units are not created in these ETFs. That's why they are available in the premium. If you see the current market price of the international ETF in the INAV, which we can see on the respective AMC website or on the NSE India website, there is a lot of difference, around more than 5 to 10% difference in the current market price in the INAV. This is because the new units are not created, which we saw how the creation and the redemption is done. That's why the demand is available more. There's a premium is more. So the relation of INAV and current market price, very, very important when you invest in the ETF. Normally, this will not have effect for long term in the regular ETF, only in the few ETFs like international or which are having too much demand but less supply. So how to read it? If the current market price is more than your INAV, means you are overpaying and it is expensive. And over the time, it may come to your current, it may come to near the market price NAV. So you may lose the extra which you are paying. If both are equal, it is okay. But current market price less than INAV is very rare to available in India. If it is available, it is opportunity, means it's available in the cheaper price, you can buy it. Now, how to select? The most important, how to select and how to do the things. There are few things in the ETF which people say and the experts say what to see. First, the size, means AUM. Higher, the better. Second is the trading volume. More, the better. Highest, the better. Tracking error in the long term much doesn't make any difference. But yes, we should see the tracking errors, which is lower, the better. Bid-ask price, it is useful only in buying and selling. Yes, the lesser is the better one. And the expense ratio, anyway, it is lower in the all ETF, but we should see because on one index, there are many ETFs are available, like Nifty 50, almost 15 ETFs are there. Gold, almost 12 ETFs are there. So you see the expense ratio lower side. All this, no need to go anywhere. We can see on the NSE India website, we'll see the live demo, how to see it. Now, what to look for in ETF, which we discussed, the expense ratio, tracking error, volume, difference in the current market price and INAV and the AMU. How to see that each ETF, each index has got one NSE or BSE symbol. Like example, this MO capital is, MO means Motilal Oswal, capital is the name. The index under is the Nifty capital, in the AMC name is Oswal, Motilal Oswal. You should see the returns in the constituents which is available on the Nifty indices website, fully, clearly, openly. We see the index methodology, how they selected and what is the process. What is the tracking error which we saw? Means the error difference between the ETF portfolio and the benchmark. The nearest, the better. But long time, it doesn't matter much. So no need to waste time on identifying and seeing the tracking error. Advantages, we saw already. The liquidity is a good. You can do the diversification with only one ETF. Nothing else is required. We know it is very low cost. There is no exit load. And at present, from Indian government, while buying ETF, there is no STT charges applicable on ETF buy. Only on the sale it is available, but this is applicable to stocks and all other instruments. While buying the ETF, we should see the broker, how much charge is applying for buying and selling. Like there are few brokers who don't charge anything when you buy and sell a stock. But there are few brokers will cost you 25 rupees or 20 rupees, which is more than the ETF you are buying of one unit of 10 rupees. So please see the charges of buying and selling from a broker. There are few brokers which don't charge anything. I use Finvicia Shunnya account for NRO account. There is a zero charges for buy and sell on the equity stocks and ETFs. They are highly transparent because it is easily available in the media about the content, what they choose, what they not choose, what is the expense ratio. They don't hold any cash. All is invested in the basket only. Flexibility for beginners is fantastic, and there is no expertise required on this. Yes, the disadvantage, few ETFs, sometime liquidity problem comes, but that is very rare nowadays. The problem doesn't come. And in the future, as the future is going, this problem is going to get solved completely. I think over 5-7 years, this ETF will become a number one as compared to stocks, and it may surpass the mutual fund and the future and options in general, not as a specific, in general. But the mandatory demat account is required. Without demat, we cannot do it. So we need to have a demat account. As present, many people who are in the market almost having the demat, because mutual funds also sometimes we are taking from demat. Tracking error, though this slide is the little older one, they say yes, but we say not to see, not required in long term. INA current market price, yes, you should see, example in the international ETF. But normal routine ETF doesn't much problem, and for the long term also not much problem. But whenever more difference of more than 5% in INAV and current markets, don't buy. Bid ask doesn't matter much, but yes, it is one of the factor. How to start investing? Open demat broker account. Research ETF simply on the website. From this session, I will share the list also. Buy it on the exchange. Monitor performance, weekly ones, yearly ones, whatever way, no need. If you're long-term investor, don't see, just keep on buying. We'll see the Excel sheet of various portfolio now after this slide. I will show how the conservative, moderate and aggressive investor, which ETF to choose from broad ETFs presently at present. I will stop and I will share one Excel sheet. This is the Excel sheet. If you can see this color one, if you see this LNGS, this LNGS is what? L for liquid, N for any Nifty equity ETF, G for gold, and S for silver. So if you make this formula and you take one liquid ETF, suppose LT Gilt Bs, you take one any equity, one or two, like suppose I write here one Nifty, A1 Nifty, why I write? Because it is 10 rupees. Grow Nifty, why? Because it is 10 rupees. You choose any gold one, gold ETF. Near there is a Tata Gold is available at 10 rupees. Zerodha Gold case available at 16 rupees. And one silver, like Tata Silver. If you take this 70 rupees, you can invest in whole India. You can take 2-3 equity Nifty equity ETF from here. That is okay. This is just for the simplicity and easy. Very simple. Now I will show you in this side. If you see here, the column large, medium, small. If you see the Nifty base, Nifty 100, Grow, More Nifty, Multi-Cap. If you invest only in this, whole Indian market is covered. Little overlap will come, but whole Indian market will be covered. If you see the average 15-year CAGR of all these, if a conservative investor also invest in this ETF only, he gets around 15%. Moderate little 17% and aggressive one gets 18%. Only ETF, nothing else required. What else is required? You can give time to family, you can give time to your health, you can give to the family, health, wealth, everything. And you can enjoy the life by simply investing in the ETFs. Now, these are the various ETFs you see here, which I listed. I will share this in the group. We can go through it. Just I made it in the simple form. Which ETF according to, I have written here like this: C means conservative, M means moderate, A, G means aggressive. You can go through it, you can play with it, and you can change it with whatever way you want. Okay, so we saw this one slide, we open the broker, and now the taxation part. Now, because everyone asks about the taxation, so I say, why you are seeing the taxation? Anyway, you to pay it. So taxation comes from the profit, not from the principal amount. So if you earn more profit, pay more tax. But we should know, any equity, the recent one, this is from this year, recent one, equity ETF, any equity of more than 12 months holding period, we know it is a long term. Less than 12 months, we know short term. Debt ETF here for the slab rate. There is no any exemption, nothing is there. International ETFs are 24 months with slab rate and 12.5 for the long term. Gold ETF, recent changes which are there, it is now 12 months, but slab rate and no LTCG exemption available in this. Now, how I am feeling, how we are feeling now. Our mission accomplished by this session. We got little knowledge, we got little understanding. ETF just so simple and cool. You get little time. I will share the sources from where to read and what to see. We can speak and we can talk to anyone. We can give education about this to any person about the ETFs. And now in the ending, the simple, low cost, transparent. We can diversify across the sectors and the assets. Lower expense ratio versus mutual fund. Safer than a single stock, no risk, zero loss process of doing investing and trading. They are growing rapidly in India, ideal for the beginners and the long-term investors. This is a foundation for passive investing in India. I started long back. Massive growth in India over the last decade, and the future also is going to come. These are the various websites which we use for these indices, for the ETFs. We'll see one by one now few websites. And I will show you one Google sheet which is made by my friend Dr. Subramaniam. We are working on various Google sheets from last few months, like on the stocks, ETF, mutual funds. So I will show you one Google sheet, automatic, everything comes in this. Nothing, no need to track, no need to do anything. So I will stop and I will just try whether this website is working. I will share with you and I will show 1 minute.
NSE website is open, Dr. Pankaj. If you want my
Yes, sir.
screen to share, I'll share with you. If you
So mine is seen, sir, now, correct? NSE India is, so now, this is NSE India. On the market data, this is the market data. If you click here, you see here left side equity. Now, how to see the ETFs are listed? How, as a general retail, we understand which ETF are getting listed on daily basis. So you click the new listing here. One page opens. You go to the recent listing. This third one, recent listing. So here you will see all possible listing in Indian market, stocks, ETF, and other things. If you see this Manuf Bees, this is the recent ETF listed on 29 August by the Nippon on the manufacturer ETF. So this is the ETF. So they will write here ETF like this. And you click here, it will open the page with full details. So this was the Grow. If you see here Grow ETF, this was the next Nifty available in 10 rupees, recently listed on 26 August by Grow AMC. So this is the data is available on here for 1 week. See the 29th and the last down is the around 8. So around 15-20 is always data is there. What we can do every Saturday night, just 1 minute, go on this and see what is the update. By default, once in a week for 1 minute, you can come to know what ETF are listed and then you read on those things. So this is one. Second, again, go to market data, go to equity and SME market. This heading, click here. You get a page. You see here equity, settlement, SME, SGP, and exchange traded funds. You see this. You click this one, this page. Okay, this is not working now. Sir, you can share your. I will stop sharing. Yeah,
I'll just inform you.
Yeah, you just share. No, it will not work at my end. In your end, it will work.
Yeah, I'm just checking. We have to go to market data, right?
Yeah, market data.
Yeah.
Market data, equity.
Equity.
Left side, third number from top, third number.
Equity and SME.
Yeah. And you click there, exchange traded fund.
Exchange traded fund.
Now share your screen, sir, because screen is not shared.
Shall I open and share or now share and then open?
Already you opened, then you can share now screen.
Yeah, 1 minute. So if you stop sharing, I'll share this.
I stopped, sir, already.
Okay. 1 minute. Where are you?
Now we can see.
1 minute. You can see?
It is coming up, I think. No, we can see the zoom now. You have to click the exchange traded fund, first number window. Yes. 1 minute. Yes, this one. Correct. So now we can see if you click the exchange traded fund, which sir has already clicked, you can see the symbol, underlying asset, open high, everything is available on this. If you click the symbol, it will come in the ABCD. Just, sir, click the symbol arrows, it will come in the ABCD format. The symbol in the box, blue color box, symbol is their first number. Down, symbol. Click this diamond arrows, yes. Click this.
It's not moving, I think.
Okay, no problem. So what happens, you can play with this. All the listed ETF will be seen here. The underlying asset, the index is there in the name. The open, high, low are there. And you can see the volume also here, volume available and value available. So if you click these diamonds, the triangle, it will arrange in the lowest to highest or highest to lowest like this. 52-week high, you can see, 52-week low, you can see. The NAV is also available. If you see the NAV of first value 30, if you see the NAV, no problem. Now you see the first one, ABG-SEC. This is Aditya Birla Crisil Board ETF Guild Fund. You see the NAV is 109.17. and the price is 108.90, which is a bold one. Price is this bold one with blue arrows. So the price is less than the NAV, means it is available in a cheaper. So in this way, we need to see the current market price and the NAV price. Same NAV you can see on the respective AMC also. And in this also, I will tell you how to see it. Now, sir, click this ABG sec. Dr. Ajay, click this. Click.
Yeah. Okay.
Yeah. Once you click this, open a new page where it will show full detail of that particular ETF which you want to see and study. So you can see all the prices. You go down, you can see the full name. Go down here. You can see the traded volume. It is the market is closed. That's why volume today not seen. You can see the impact cost. You can see the INAV in the second box where the price information is there. In the price information, second box above the tick size, second from the down. You can see the INAV is there and price is there. So whole details are given on this page. Every ETF you can understand, you can read, and you can get the knowledge, high, low, everything. So this is the way we need to see the ETF. Now, if you want to learn about the ETF in basic, in short, same website, sir, just click the home. Just go the cursor there, click on the home. Just now click on the about. Just keep the name. Wait. No, now product and service. See the right hand side, product and services box is there. Click your equity market. Equity market, click. Now here all details of the ETF is available. If you scroll down, you can see you can see the ETF, click it. ETF, indices, mutual fund, all possible data is available. Take your time, go through it only for once, not for always. Once you read it, understand this, everything is there. I have also taken so much content from this page. There are videos recorded by the experts, by the NSE team. There are some pages are there on this. We can see each and everything. Products, then indices, various indices. If you click the indices plus sign, all various indices will open, which are available at present in India. So that is plus, yes. You can see this all which I told, strategy indices, thematic indices. If you click that plus, each and everything will keep on opening. And you can see and study on those things. Sir, open anyone, just anyone. Click here about thematic, yes. Yes. Now you click the capital market. It will take you to the next website. Click first one. It will take you to the Nifty indices website. Okay, we can click OK. Now it is going to the Nifty indices. This is the website where all details about each and every indices with ETF is available. Now this is the website. Now if you click in this down, if you go down, there is a fact sheet. Fact sheet. Click the fact sheet. You will get a PDF. It will open PDF. It will give you the short, the process. This is the. It will tell you the name of the ETF, date. Recently it is rescheduled. It is adjusted recently. The content, the portfolio. See the returns. This returns is a CAGR, 5-year CAGR. You see how much is the CAGR on the right hand side. Since inception, it is there. Standard deviations, fundamentals. What it includes, it is written 100% financial. If you go down, it will tell the top 10 stocks in this index with the percentage.
Weightage.
If you go down, weightage percent also there. And if you go down, it will tell the method, how the stocks are selected, how they are taken in, how they are taken out, and who is doing this process. If you go down, this one, index methodology. And who is managing this. So this is one. And if you go again, sir, same page, Nifty Capital again, go on the same page, second window, third number window from the left side. Nifty Capital is there, beside the fact sheet, top.
1 minute. I partially can't see.
Otherwise, close this, no problem. You close this. Third number, from here, third number. This is 1, then 2, then 3. Three number, Nifty Capital.
This is
beside this third. This one, yes, this one. So now, if you want to see the full index constituent, or click the Indian index constituent, it will show the Excel sheet, second number, below fact sheet.
Offering, sir?
No, below fact. Go down, sir. Go down. Go down. Yes, index. Below fact sheet. Below fact
Index.
sheet, click index. The Excel will download and it will show all the stocks in this ETF.
Yeah.
It will come. No problem. I think it downloaded in your right hand corner in the
Yeah.
blue arrow. Okay, so means we can see like this, and we can see the returns also in this web page. Everything is available. So this I can share. This is working at my place. I will share, sir. This you can stop. Yeah.
Thank you.
Yeah.
I'll stop sharing.
Yes, sir. Yeah.
Where is the stop screen?
The top, it will be seen on the top, sir. Blue color. Bring the
Yeah.
cursor. Play. Yes. So I will share now. Okay. So now my screen is there. So this is the NSE indices web page. If you click here, NSE logo, you can see full page. You can see whole indices in this circle form. You can see the all sheets and reports. If you go to the reports, this is giving daily report, monthly report, historical data. And if you click the index dashboard here dashboard, you will get a one page which gives quarterly. Now see, this is August, recently given dashboard of the equity month, August month. So you click this, you get all the content, what has happened in the August month happening, what ETF came, what content is there, how much trading is there, how much activity is there, everything we can get from here, from the reports. And these are the various indices which we saw, how to go about it. There is a market data, you can see live watches, equity stock watch, movers, everything. So in this web page, you get all the details. And one should see and read it. No need to do any stock investing. Just go and see what is there. This is the Nifty indices. And there is one more website. One website is there. This you can see that now, India Passive Fund, correct? The website is India Passive Fund, or same is seen?
Yes, India Passive Trends.
Yes. So this is the India Passive Fund website, which is again only for passive investing of mutual fund and the ETF. And in this website, if in the home page, you can get ideas of daily basis. Any new ETF came, any new mutual fund came, they will write here like this. See, this is a Zerodha has launched in one ETF. So they will write ETF if it is a ETF. If it is a fund, you see here Axis Nifty, they will write index fund, means mutual fund. How much amount, from what date open, what date close. So in this page, you get all that ideas. Like we saw on the NSE India after listing, this is before listing. But you have to check carefully here, index fund is written or ETF written. Like see Angel One Gold, it is listed on, it will close on 1st September. After that, it will list. So this is open now at present. How much we can invest and what we can invest. So this is also place we can see. So these are the three websites, and one is the AMFI, Association of Mutual Fund Industry. That is not required for ETF. But if you want, we can see there also when the ETFs are listed like this. This is the home page of Mutual Fund Association of India. You to go down. If you see here down, new fund offer, it will not open here, but I'm showing you. You click the new fund offer. When you click the new fund offer, whatever are ongoing NFOs for ETF and mutual fund, you can see in this page, in this year. Okay. So these were the four websites which we saw. And I will show you now the Google Sheet for use. Dr. Subramaniam, you are there? I told him, because he's flying from India to UAE today. I told him to message me once he joins. I don't know whether he's there or not. Okay, I will show. The screen is visible as a Google Sheet to you?
DMA, RSI.
Correct. So now I was talking about the various things. If you go to YouTube of India and write ETF investing and trading, you will find unlimited videos. There is a Mr. Kaushik is there. He is the master of ETF ki dukan. If you write in the Google Sheet, ETF ki dukan, he is the godfather of ETF in India at present. He has developed so many strategies, and this Google Sheet we have made from those videos and many other videos by seeing. And we put a disclaimer also here. We are thankful to all people from where we made this, and there is no personal gain from our side. This is for the education purpose. We may share with the people, they may use it, but there's no commercial gain. And we are thankful to Mahesh Chandra Kaushik and many people from where we learned. We are thankful to ChatGPT, Perplexity, everyone. So what is this? Nowadays, too much trading is going on ETF. How it is going on? What people do? They will see the current market price. If you see the box DMA 21, what does mean? Daily moving average of 21 means 1 month. This is the current market price and RSI. Any ETF which is away from current market price in percentage terms and coming at the top, we should invest. Like minus 2.61. This is the ETF which is Kotak Nifty. This is minus 2.61 away from the current market price. So we invest in the ETF which are far away from current in the top order. And mind, this sheet gives automatic daily basis new names. This is automated sheet made by the Subramaniam and me, and this gives each and everything. So there is a DMA 21, DMA 100, here DMA 50 and DMA 200. And here summary, if you see here, the investment amount also there. If you change the investment amount, the quantity if you see in the first box will also change. So whatever amount you are investing, according you can put. So this one box is respective to this box. So there are 4 boxes we made here. These are 2 and 2 are on this side here. So whatever amount you put, automatically your quantity also will change. So it will be automatic, but we have to copy and save at your end. This is view only. You have to copy and save. Now second window. In this second, if you see this, the ticker of ETF is there, underlying asset is there, second box, third is current market price, then RSI. There are few strategies on RSI on ETF investing. They say whenever RSI is below 30, you buy that ETF. It is going to come up 100% some or other day. Then you decide your exit level as per your level of trading or investing, or you just keep on holding. So this also will come in this box automatically on daily basis. If you see this box, whenever RSI is 30, less than 35, automatic the names will come, ETF will come, their price will come, and the signal will come to buy. You can buy it if you want. Always see ETF are bought between 11 a.m. India time to 1:30 or 2 p.m. India time. Not before 11, not after 2, because by that time they get stabilized. And people say you should buy between 1:30 to 2 o'clock in the afternoon, because by the time all activity is stabilized in the ETF. And this is the other ETF ranking when it goes below 30. So this is second. Now this third page is the holding. Whenever you buy any ETF, you have to enter only in these yellow color boxes, nothing else. So you enter your holding of ETF, automatically it will be seen at all places. Fourth is the profit. So whenever you make any profit, you sell, again enter here that ETF which is sold and remove from the holding. Automatic all other boxes will get filled. This is the test one which we created. This is a very fantastic sheet. If you see here, I will show you this Nifty IITF is seen. So there is an option when you save at your end, it will show the drop down, and whatever ETF are there, you click there, you will able to see all this. This is a very busy slide for you people because you are seeing for the first time. But when we use it, there is a Bollinger parameter, MACD, RSI, EMA. Even you see the CAGR is written there in the yellow color. If you see the orange color 1, 3, 5, 7, automatic will come of the respective ETF. Then there is a XIR. If you are investing, that also will be calculated automatically. And the right hand side, you can see the various Nifty levels. Now suppose new ETF is launched. You can enter in this box here. Enter only the NSE code. Automatically it will be added in the sheet. So new ETF in future whenever you enter. So there are 3 RSI 1, 2. Because each sheet we kept a limit of 80 ETF to enter. So that in 3 sheet will be 240 ETF. So second, if you enter here, it will come automatically. If you enter here, it will come automatically. And this is the last sheet which is showing all possible listed ETF in India at present. Their name, their index, and their ticker with the volume. With the volume is available. So these are the 4 sheets in one Google sheet. I will share in the group. You all can use it. But this is acknowledged. This is our only brain uses by copying and by learning we made it. And we have not purchased any ETF and we have not taken from anywhere by paying money or something else. So for you also, please keep the disclaimer same so that no problem will come in future. So this was about the ETF. Okay. So now from my side, the content is over. If any question answers are there, we can take.
Dr. Harish, can you please do the Q&A session? Dr. Harish. If Dr. Harish is not there, I'll see in the chat box there are certain questions being posted by our participants. Then I will read it off and I request Dr. Pankaj to see if he can say anything about it. Dr. Ramesh has asked, Dr. Ramesh Babu has asked from Tamil Nadu, what are the websites from which one can view the details of ETF and learn about ETF? I think you have already answered that.
Yes.
Dr. Ashwini Agarwal from Raipur, Chhattisgarh has asked how to know primary amount of ETF at buying time. I don't know what exact premium amount of ETF at buying time. I think you also mentioned that. If you don't mind, can you please tell.
We saw when we go to a broker, you will be seeing the live market price, which is the trading price of the ETF. So that is the price where you can buy and sell. And if you want to see proper, you have to see the INAV either from the NSE website or from the AMC, or some brokers are showing like Zerodha. And you can compare and you can understand the price difference. If the current market price and INAV is same, you can buy, no problem. Little here and there, no problem. But too much difference means current market price is very much away from INAV, means it is too much high, then avoid buying because it is available in very much premium. You will face a loss in future because current market price will come near to INAV, it will come down. That has happened in international ETF many times in the past and also happening now also.
So the rule is the INAV
yes,
should be less than CMV.
Yes,
Then
either
only
it is near, either it is both same or near about 0.5%, 1% near about. But any current market price or INAV more than 3, 4, 5, 7% avoid.
Dr. Lakshmi has asked, what is the slab rate for the taxes you have mentioned, and what exactly is? I think that is a personal percentage of slab rate.
Yeah. So for all equity, it is a normal like short term, long term. Short term 20%, long term 12.5 with LTCG exemption of 1,25,000. For all international, it is personal slab rate, and for the gold ETF, it is for 12 months.
Dr. Raghul has said tax rates for different ETFs are differs, or is it has got some uniform tax rates?
No, it is uniform equity. All equity will come under equity heading. All debt will come under debt heading. All gold under gold heading, and international separate heading. There is no separate for one ETF like Nifty B or next Nifty. No, they all are equity.
Dr. Ganji Shiva, Dr. Pankaj is already sharing the Google Forms, what he has displayed. So we will all be benefited by that. Dr. VS, we are recording it, but we'll release the link later on. Dr. Ganji Shiva has again mentioned, please give 5 ETFs for a beginner for 5 to 10 investment range. I don't think so. He has mentioned that he is not a SEBI registered advisor, but nevertheless, I leave it to Dr. Pankaj for the benefit of doctors.
Yeah, as I told, one Excel sheet I showed, I will share that also. It is across for all people from young to old, from beginner to expert. All 3 portfolios are there. You can see at your own level according to your own understanding. Contact your financial advisor and you see it. I will share that Excel sheet also. You can play that Excel sheet. No problem.
Okay. Dr. Mandhar Rao has mentioned which parameter is important while buying ETF, volume or value?
Yes. So first parameter is volume. Then if the volume is more, automatically the value is more. Most of the time it is directly related. But sometimes value may be less. So you should see first volume. If volume is criteria fulfilled, then go for value. If volume not fulfilled, don't go for value because volume has to be more. Liquidity is most important. But if both are good, fantastic. But if volume is more, no problem for value. Anyway, value comes automatically there.
Dr. Ramya is asking, what is the proportion of ideal investment in gold, silver ETFs? Gold
Now
ETF, silver ETF.
Yeah. So many financial experts nowadays, previously they used to say 5 to 10% of gold because silver ETF was not there. Now people have increased the limit. They are telling 15 to 20% of including both. Now including both, you decide at your own level what you want more. So 15 to 20 for gold and silver including both at present. many experts are and advisors are saying. So in that range, we should have.
Well, we don't encourage F&O, but still, Dr. Ragul has asked a question. Can we short sell ETFs?
Yes, so this ETF in India service is not available. In Western country, there are index listed for short selling, reverse selling, which we say. So those ETFs are available in Western countries. In India, their listed index are there, but they are not tradable till now. In future, we may get this type of ETFs also in India. Just wait for a few years, it will come here also. So
Dr.
that will
Samir
be
Reddy is asking any other selection criteria other than what you have mentioned, INAV for long-term investment.
See, for long-term investment, nothing matters. As I told, you are long-term investor of 5, 7, 10, 15 years, just buy ETF. Don't see because you are long-term. In the long-term, tracking error doesn't matter. Long-term INEV, CMP doesn't matter. Long-term only matters is the volume which is there. So no other method, just invest and forget and keep on watching and keep on seeing, but buy which having the good volume. Never buy the volume less than 1 lakh number. Always see, and volume is easily available. You can see on the NES ETF. But volumes are now in the crores and 15, 20, 30 lakhs in the ETFs.
Nowadays, yeah.
Yeah.
So I throw the platform open. You can directly open and then ask the question. But Ramya has again asked on an average minimum, how many months one need to wait to sell based on your practice to get good profit
Yes.
from any.
So now again, I will say for my what I do, I am not advisor, but please take it a pinch of salt. I do each and everything ETF. From last 1 year, I stopped the stock trading. I am just doing long term in the stock, and I use all methods and strategies which I used to use in the stocks. Like I will do swing trading, I will do short trading, I will do positional trading, I will buy ETF which is lowest today. Like example, I got watch list is there. I daily see by 1 o'clock or 1:30 which ETF is gone down more in the day. I will buy that ETF if I don't have that ETF. If that ETF is already with me, I will go for second number. All I will average it and I will keep on accumulating. And once that ETF accumulated is 2%, 3%, 4%, I will sell it. This is for the short swing, short method. Second is for medium. Whenever any ETF is 5, 7, 8%, I will sell it. Third, I will keep for ultra long term, I will keep for lifelong. Now, how to do? You will say, doctor, you sold one ETF, again, how will you buy? So, on one index, there are more than 3 ETFs. So, I buy all 3. Like on Nifty 50, I will go for Nifty Bs, SBI Bs, which is from SBI, and or any third Bs. Third, I will buy all 3. I will keep for one for long, one for mid, one for short. So I will apply the whole methodology on this so that at present, if I sell one also, 2 I am holding. When they go up, again I will sell. When they go down, again I add. So where the sheet which I will share with you all, that sheet contain from every index minimum 3 ETF with highest volume. So you can take all those things with eyes closing. Ready-made portfolio performance are given in the Google sheet. Whatever coming, you can take it. No problem at all. So I do like this in ETF, everything. I will exit in 2 days also, sometime 5 days also, sometime 1 year also not, like this.
Any other participant or our faculty from F3 want to comment? Please open up your mic, unmute yourself, and please ask or comment. I am seeing Dr. Amishwara sir. If he's there, he can open the mic and comment. And Dr. Harish Gopal, if you are back.
Sir, you are unmute, sir, unmute.
Please unmute yourself, sir. So,
Amish sir, you to unmute. We cannot
Amish
hear
sir.
you.
Sir, kindly unmute, sir.
Okay, it is not allowing.
I'll allow you, sir. I think I'm the host. I'll just see how do you do that. I'll make you co-host. Now you try, sir. Amit sir. Amish sir, you try now. You unmute now? I don't know. Let me see. Yeah, I'll just go here and then, yeah.
Now you can talk, sir. Yes.
So, very good talk, Pankaj. Really, you covered the basics and you have really told the good principles which we should be doing. And it's very amazing to see how ETF has boomed. Somebody who's been investing in American market ETF since 2009 and 10. And, most of my overseas things is in ETF only now since I moved back to India. And it's great benefit for us that, in last 5 years, ETFs has really opened up. It's made our life so easy. And I feel that ETF for long-term people like us who are not traders, you do trading, but people like us who are long-term investors, I feel ETF is a way more forward now than mutual funds. What mutual fund was 10 years back, now ETF is there. And your ETF should be a good percentage of your portfolio for long-term investment. You may invest in shares or mutual funds, but of that, I said more than 30% should be in ETFs, if not more. And that's all I would like to say. Most of my overseas American is now fully into ETF only for last 10 years. I don't do anything except remove what I need to bring back to India, and that's all. So I feel that just a bit of, from my experience, to have ETFs for more than 10 to 15 years is a minimum time frame from long term. And whoever, as sir has rightly said, you can even start with 10 rupees and 20 rupees. Those who are young have not started, start now. That's all I would like to say.
Sir, my
Thank
whole
you, Pankaj.
portfolio, yes, sir, my whole portfolio I shifted to ETFs, sir, whole. It is a fantastically diversified gold, silver, smart BTI, if you like anything. If you go into the multifactorial momentum value, zero loss. You cannot get loss in this. So it is better and peaceful, no tension. And it is listed, it is available, it is volume wise, and nothing is required.
And the best part of ETF, unlike mutual fund, which I like to add is, when you sell, you know at what value you're getting.
Yes.
Mutual fund, you'll get the end of the day value, which you have no control. You don't know what you're going to get.
Correct.
Yeah. So that's the only other advantage I like to say.
Yeah.
Thank you.
There
Thank
is
you,
a-
Pankaj.
yeah.
Really well done. And thank you, sir, for giving this
Thank you.
opportunity.
Yeah. Sir, there is one question, will over trading ETF attract too much expense ratio? I covered this point. Use the broker which don't charge anything for buy and sell. Example, I will name one broker which I am using just for the personal, not for marketing. Shunya Finvesia I am using. There is a zero charge on buy and zero charge on sale from broker. I will pay only expense ratio of ETF which is there, including the NAV price and government taxes, nothing else. Again, I will say, whenever you are selling anything, the expenses and the profit, the taxes you are paying from your profit. Suppose I am earning every month 3% profit in any ETF. In 1 year, it will be, suppose consider every month 3%. So 1 year is 36%. Whatever taxes I pay from my 3%. So anyway, I'm not losing anything from my pocket. If I'm getting a profit, I'm paying. If I'm getting a loss, I'm not paying. So expense will be only a broker, nothing else. So you have to see that things properly, because some brokers charge 20 rupees, 30 rupees for buy and sell. So you have to see this. And anyway, long-term expenses are taken over from your profit, so not to worry.
Can you please repeat the name of your,
Yes.
your.
Yeah. It is Shunya Finvesia. It is the Indian from Chandigarh company, because a lot of NRI who done the WealthCon course, we do FNO trading. So that only broker allows at present in India for all our NRI to do FNO trading with all facilities. That's why we all use that. And from there only we came to know about this company. Other brokers and Demat are not allowing those things to us.
So anybody else want to comment? Please open up and then we will close if there are no more questions or nobody's asking. Anybody?
Sir, can you unmute the Subramaniam is there, I think. Dr. Subramaniam?
I will.
Yeah, Subramaniam, can you raise the hand, Dr. Subramaniam, if you are there? Or just his name, by what name? Subramaniam is there by the name of Subramaniam. From down, if you see. From down.
Yeah, I think Ganesh.
He is there. Yeah.
He's able to talk.
Good evening. Yeah. Subramaniam, you can talk about the Google Sheet. I will just open it and in brief, 1 minute, you can talk something. Wait.
Yeah, sure.
Yeah, I will share 1 minute.
I
So we are
welcome
thankful.
Dr. Subramaniam, pediatrician from Tamil Nadu, who's a author and a partner and a co-author with Dr. Pankaj to make those Google Sheets. Dr. Subramaniam.
Yes.
Sir, yes, sir. This first of all, I would like to thank Pankaj sir for giving me an opportunity. And it has been through his guidance that we have prepared all the sheets. And through, I have already put a disclaimer there that it's been like taken. The ideas were taken from sheet metric. That is the basic thing. The sheet metric gives us the YouTube video channel, which gives us all the details on how to prepare the sheet from the scratch by ourselves. And from that idea, and then what Pankaj sir had given us about the output, what is required, and then even Mahesh and the Kaushik, and some of them, the formulas were like, to keep it simple, I just had to take help of Perplexity AI, same like ChatGPT, and based on that, we have prepared this meeting. Sir, anything in particular you want to mention on this sheet, sir, or shall I
No,
go
no, it's okay.
from the start?
It's okay. No problem. No problem. I told them I will share if any questions come, then we'll see. And okay.
Okay, then, okay, sir.
Yeah. Thank you very much. Yeah. Yeah.
Dr. Subramaniam.
And also, just one, hello.
Yeah. Tell. Yeah.
Yeah, just regarding that sheet, same thing, just to refine that one. So the down, the sell alert comes after 10% above. Whosoever wants wishes to sell, they can sell. Otherwise, they can keep on hold for a longer term.
Yes.
10%, sir.
Yes, sir. I have just kept it for 10% profit.
So this box, if you can see, whenever your holdings of any ETF crosses 10% profit, automatically the name will come in this box. Automatically it will come. So if you want to sell, you can sell it.
Yeah, it's a sell alert, but it's up to the investor, their appetite.
Yeah.
They can keep it for long term, or if they wish to sell, they can sell.
Yes.
It's not mandatory to sell.
Yeah. Okay.
That's a good criteria.
Yeah.
Thank you.
So, yeah, thank you, Dr. Subramaniam. Dr. Pankaj, any more questions
Yes,
you are
sir.
seeing in chat box?
No, nothing.
Yeah.
No.
Dr.
No
Harish
question.
Gopal, are you there? Dr. N.L. Sridhar, Secretary. Dr. Pawan. So if no questions are there, and I will take the responsibility of proposing the vote of thanks to our guest speaker from UAE, who has taken a wonderful session today with lot of homework on it, and so much of authenticity and safety features which he has mentioned. And I think the bottom line, I can also read from his message, which I can summarize and tell our participants who are so eagerly were waiting for this ETF, is that ETFs are simple, and please make it more simpler. Don't make it very complicated. Only after 1-2 years in the ETF, probably, if you can spend time according to your ability, according to your capability, according to your time you spend on the ETF studying, you do the rest of the things what Dr. Pankaj has mastered, but at least make a 4 to 5 ETFs and start investing for a long-term basis. That should help you. Already in the Google chart, he has mentioned few of his observations of the various portfolio models or sizes or samples in it. And I urge you to now think, consider, and pursue ETFs in your investment journey, because you are not having a broker in between ETF financial instrument and your profits. Neither you are going to give anybody commission, nor your expense ratios are so high. I think this is the most important message I wanted to convey. There are fancy names coming even now in ETF, but still that is your choice. It's not the mutual fund manager or the mutual fund distributor or the mutual fund AMC's choice to push it on us. You can take a call on that. And please consider, read at least some primer on ETF from today. Read, and also please repeat seeing this video number of times. And we have 2 more ETFs talks in the channel. You can search. I will also put that. Please read one which I have taken about 2-3 years back, and this is much more advanced than what I have given because it is very detailing and practical, and also very what do you call, giving you the tips about how to go about for a beginner and also an advanced ETF person.
Yeah.
So with these few words, I thank Dr. Pavan, our anchor. I thank Dr. Bhaskar, Sankosh Bhaskar, our president, Pediatric Academy of Telangana, Secretary Dr. Ilasaksha, Dr. Sridhar, Treasurer Dr. RSV Krishna, and our YouTube channel members and tech support, and all the participants, and Dr. Subramaniam and Dr. Pankaj for taking the trouble of giving us. Thank you very much. We now end the session today, and very shortly, if you can post your further questions, Dr. Pankaj is there in our group in WhatsApp group, both the F3 groups. He will be having a definite privilege and also opportunity to take more knowledge from Dr. Pankaj in future.
Yeah.
Thank you very much.
Yeah, but there was one question, sir, last. What to do about the Google Sheet? We no need to enter anything. This Google Sheet contains almost 70 names, which are from broad-based ETF. If you want to see other ETF, then you need to enter the name. Otherwise, this contains almost 60 to 70 broad-based one. This doesn't contain sector, thematic, and smart beta ETF. So you have to enter those names in the sheet which I told. So automatically it will come.
Thank you, sir.
Thank
We
you.
now close the session.
Thank you. Yeah. Bye.